I've been buying gold since about $45 an ounce, back when I didn't have any money, but $45 was worth a lot more then than it is now. And I've never sold an ounce, so I've got a bunch of it. So yeah, I'm happy about what's happening with gold. I'm not happy about the reasons why it's going up. The early 1970s, when the dollar was cut loose from gold. And the whole world, but especially North America, is built on a pyramid of debt, phony money printed by the central banks. And it's going to end badly.
U.S. economic growth fell short of expectations last quarter, marking an essential data release ahead of the upcoming election. Preliminary figures from the Bureau of Economic Analysis, published on Wednesday, show that the nation's actual gross domestic product, GDP, an inflation-adjusted indicator of the total value of goods and services produced, expanded at an annual rate of 2.8% in the third quarter. According to Dow Jones estimates, this performance reflects a decline from the 3% growth seen in the second quarter and falls short of the 3.1% growth predicted by economists. In his interview, Doug Casey offers his perspective on the current economic landscape, referring to it as the Greater Depression. He delves into the trajectory of the U.S. economy, highlighting government deficits and the potential repercussions of rising interest rates. While Casey expressed contentment with gold's strong performance, he also voiced concern over the deeper economic issues fueling its upward trend. Since the start of this year, gold prices have climbed by 24%, reaching record highs in both domestic and global markets. This rally has reinforced gold's role as a reliable safe haven asset, amidst ongoing economic uncertainties and geopolitical tensions. Central banks have been actively increasing their gold reserves, driving strong demand as they seek to protect against currency devaluation and economic instability. While experts acknowledge that short-term growth in gold prices may be more subdued, they remain optimistic about its long-term trajectory. Factors such as persistent inflation, potential monetary easing, and geopolitical risks are expected to support continued bullish prospects for the precious metal. Doug Casey argues that the early 1970s marked a pivotal moment in economic history, as it coincided with the complete detachment of the U.S. dollar from the gold standard. According to Casey, this disconnection laid the foundation for unchecked inflation and an ever-expanding government. Let's delve into the video to gain further insights. Before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
I've been buying gold since about $45 an ounce, back when I didn't have any money, but $45 was worth a lot more then than it is now. And I've never sold an ounce, so I've got a bunch of it. So yeah, I'm happy about what's happening with gold. I'm not happy about the reasons why it's going up. Basically, I've been saying for years that we are entered upon something called the Greater Depression. And a depression is a period of, forget about what the government says about 2 quarters of down statistics mean you're in a recession. They never define the word depression. I'll give you a definition of the word depression. It's a period of time when most people's standard of living drops significantly. And the fact is that the average North American standard of living has been dropping in many ways, not always. In real terms, the early 1970s, when the dollar was cut loose from gold. And, the whole world, but especially North America, is built on a pyramid of debt, phony money printed by the central banks. And it's going to end badly. So what's the nature of this depression, the Greater Depression? It's not going to be like the one from 1929 to 1946. It's going to be longer lasting, it's going to be different, and much more unpleasant. Well, starting in the early 70s, when the dollar was cut loose from gold totally, and that's when inflation has been getting out of control. The government has gotten bigger and bigger and bigger. I mean, look, most people are unaware of the fact that only 100 years ago, 110 years before World War I, the U.S. government lived entirely on import duties and excise taxes, very little else. It was a very prosperous and very free time when the government only absorbed a few percent of the GNP. Now, and you can't believe the numbers, really, they're all fudged and very complicated. It probably takes about 40% or more of the GNP, misallocates it, dissipates it. So to answer the question, the standard of living of the average person in the world goes up for 2 reasons. Number one, the average guy produces and he consumes, but he produces more than he consumes and he saves the difference. Second thing is technology keeps building upon itself at the rate of Moore's law. So those two things together have made things better. State intervention has been making things worse. And I think we're in for a real catastrophe, despite those two long-term things, which will make the world better over the very long term. Over the short term, the next 5 or 10 or 15 or 20 years, and that's barring World War III, which is quite possibly on the horizon as well.
BRICS Plus, which holds 42% of the world's central bank foreign exchange reserves, is likely contributing to the global trend of de-dollarization. The most significant alternative to the US dollar for the bloc is gold. Although BRICS Plus nations have been aggressively acquiring gold in recent years, it still constitutes only 10% of their total central bank reserves, half the global average. Due to these countries' relatively low external liabilities, there is limited potential for international diversification toward BRICS Plus currencies, even in synthetic currency. Doug Casey contends that trust in the US dollar is diminishing as individuals come to see it as a floating abstraction, essentially an unsecured liability of a government that has overextended itself. He emphasizes that in regions such as Southeast Asia, particularly in China and India, the public continues to regard gold as a crucial asset for savings. Casey warns that North America is grappling with a precarious situation characterized by economic mismanagement and subpar political leadership. Now let's redirect our attention to a video.
People realize that the dollar is a floating abstraction. It's the unbacked liability of a bankrupt government. So they want to dump it. They don't want to use it. They don't want to trade between each other where everything clears through New York and put themselves at the discretion of the U.S. government. Look what happened to the Russians. I mean, they lost hundreds of billions of assets just because Washington decided that, yeah, we want it, so we'll take it from you. So, yeah, it's a good idea that they're getting away from the dollar. I mean, the dollar has been the major export of the U.S. for the last 40 years. It hasn't been Boeings, it hasn't been wheat, it's been dollars, trillions and trillions of them. I don't know how many, they don't know either. $30 trillion are outside the U.S., and they're hot potatoes because nobody has to hold them. They're just convenient for the moment. So this new currency that they're talking about, it's a good idea to have an alternative. But look, the Russians, the Chinese, the Indians, the Iranians, the Brazilians, there's no reason for them to trust each other. Having a common currency actually doesn't make realistic sense. They already have one. It's called gold. So you don't need 40% gold backing, 100% gold backing, and you don't need a currency. You just need the metal itself. That's all. That's the way it was before the last depression. So you can't have fractional reserve any place, in a currency or in banking or anything. But it's a good idea. They're going to go to gold is the answer to the question, because they don't trust each other. And that's why they've all been buying gold. And the public isn't involved in gold yet. It's mostly these central banks that are trying to dump each other's fiat funny money, and they're buying gold. What else are they going to buy that they can use as a money? I mean, you can't use cattle as a money, can't use wheat as a money, can't use artwork as a money, can't use lead as a money. Nobody can store that much of it. That's why gold has always been used as money. It's uniquely suited and well qualified for use as a money.
Yeah, interesting fact.
It'll be reinstituted. It'll be reinstituted, and we'll use gold in daily commerce, unless, of course, the world turns into a police state all through Eastern Asia. But certainly in China and Thailand and India, there are gold stars everywhere. I haven't been to China for some years, but it amazed me. There are gold stores everywhere, Beijing and Shanghai. The average Chinese guy is very used to accumulating gold. Some paper money that can be crumpled up and dry, and they all buy gold. Their savings are in gold, which is very intelligent, unlike North Americans who don't do that. They hold paper, which is bad enough, and it's in banks, which is even worse, because I don't know what's going to happen to these banks. I mean, most of them are bankrupt, frankly. And of course, if the government bails them out, it can only do that by creating lots and lots more fiat monies. They're in a death spiral at this point in North America, in addition to the fact that the political leadership in both countries is criminally bad.
Gold and silver prices are expected to surge significantly, influenced by various economic trends and geopolitical uncertainties. Gold is increasingly viewed as a hedge against inflation and economic sanctions imposed by the United States. Although inflation rates have moderated, experts remain optimistic about gold's long-term trajectory despite the potential for slower short-term gains, due to the gradual pace of interest rate cuts. This bullish outlook aligns with a broader sentiment in the market as investors seek safe haven assets amid ongoing economic fluctuations. Have you invested in gold or silver, and what has your experience been? Would you recommend it to others? Feel free to share your thoughts in the comments. If you found this content helpful, give it a thumbs up and remember to subscribe to stay updated. Thank you for being a part of this journey with us.